Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to the AJ Brown Show, episode 156.
I can't believe
is November 1st. Earnings are employment data, thicker earnings week. AJ, I'm starting to see the volatility kick in. Welcome. We got a special guest today. I feel like we got a really exciting show ahead of us. Where do you want to begin? How are you feeling? Are you seeing some opportunities on the board?
Well, first I would be remiss because I know that my daughter and my wife watch this. I got to say happy birthday. Most people know that Josephina's birthday was yesterday on Halloween. So happy birthday, little girl. Yeah, so much is going on. We got a confirmed reversal in the broad market. We've got so many opportunities. Earnings season is still kicking it. So we've got so many opportunities for doing all kinds of trading. So yeah, Sip, we're good to go, man.
Well, let's go ahead and start off with the S&P because we've been at some highs for quite some time, and it seemed as if the big shocker midweek this week was Meta and Apple earnings. A little disappointed, and
Microsoft as well, man.
And that was one of those after hours where the market tanked, and then we gapped open, and then turn around today, and we've got employment, which is kind of bringing us back up. So we're starting to see a little bit more of a battle here at these still kind of highs.
Yeah, well, let's first start off with our general picture, right? Because that's what we've been worried about for like over a year, right? Like close to 18 months. So that general picture is like what's happening with interest rates, what's the Fed thinking? And I'm going to stick by my gun, Sip, and say that the Fed has kind of got us to a point where, they're now not just worried about inflation getting out of control, but they're also worried about our employment situation, right? Our Fed has that dual mandate of keeping, Americans employed and at the same time keeping information in control. And a lot of times those mandates are at odds. They've been focusing on inflation ever since the end of the pandemic, right? And I feel like they've hit this point. I mean, yeah, they can go a quarter point here, a quarter point there. It looks like the market has priced in a quarter point drop in November and another quarter point drop in December. But we're now into this fine tuning. When we look at the Fed meeting minutes, it's like they're, butting heads with each other, which kind of tells me that they're at this balance point where they're going to be just doing minor tweaks here and there, which means investors are now focused on what I feel like they should be focused on, which is that the actual companies, the actual assets that are in the markets, right? So this earnings season was one of the more important earnings seasons in a while because all of a sudden investors are no longer focused on what the powers that be that are controlling the big levers in our economy and are now focused on how well is the actual substance in the economy. And, a lot of folks have been focused for years on those big players, Metastock, Microsoft, Nvidia, Tesla, Amazon, Facebook, Meta, that's the same thing. Google, right? Those big players, right? Those are the large caps that have been really like, if they sneeze, the rest of the market feels it. And yeah, this earnings season, some of those companies, and I'm thinking about Meta and Microsoft, really disappointed investors, and it caused a little bit of a sell-off. But I have to say, investors, as we've been pointing out technically in the charts, they've been on edge, Sip. They've been like uncertain about what's coming next. I think they're focusing a lot on, this upcoming presidential election, which really, when you look at the substance of it, isn't going to have much effect on the markets. But people get rallied and they are always looking towards the next event, right? So I feel like there's a lot of folks focusing on that event. They're also thinking about what's happening in the Middle East, what's happening in the Ukraine. Is North Korea joining in with Russia to work against the Ukraine? What's NATO going to do? What's the EU going to do? What's Iran going to do? What's Israel going to do? So this is on people's mind. Is it going to be Trump? Is it going to be Kamala? So this is causing investors to kind of like wonder, what are the rules of the game? And when they don't know the rules of the game, they sit on their hands, and that's kind of what they're doing. And then any little tinder that you throw into that bunch of like that pressure cooker of nerves causes some sort of move. And that tinder this time was, not really enjoyable earnings coming from Microsoft and Meta. And that caused a sell off yesterday. And, the employment numbers are nothing special today. Neither really was the PCE, the personal income and outlays number yesterday, nor the GDP advanced numbers for quarter three. They weren't really, like I said, people aren't focusing on the big numbers, I feel like, anymore. They're focusing on little earnings. I think today what we're seeing is less of a response to to employment and more of just bargain buying.
And it almost seems as if what was I guess? Well, the presidential election, that's a big one here, just for the volatility. But from like a top level down investor is like, I'm getting news from over here. This is good. Oh, Tesla's crushing it 20%. I'm getting bad news over here. Meta's complaining about AI. I'm getting and like you said, anxiety.
That's what we can count on right now, is that there's this enormous amount of anxiety about, and I call that uncertainty, not knowing what the future holds. And so what does that mean? It means people are buying derivatives as hedges, which means we want to be, if we're on the right side of that equation, we want to be thinking about selling those derivatives to those high dollar buyers, right?
It's like the insurance contracts, right?
Yes.
Whenever I'm meeting somebody that's like, oh, who's AJ Brown and what does he teach? I'm like, well, he teaches options and he teaches premium selling, and it's these insurance contracts. And we're seeing some a storm of brewing, right? And because of that, we can put out an insurance contract, and we can, or actually we're the ones selling the insurance contracts
Mm-hmm.
to kind of hedge in for that storm.
It made me want to look at this VIX number, right? The VIX is a measurement basically of the implied volatility of the S&P 500, not historical volatility, not something that we're measuring in price action, but instead what the VIX is kind of a measurement of how many people are hedging their positions using options, right? How many people are buying insurance because they're not sure of what's going to happen in the future. And you can see that we've got this all-time average number that hovers roughly around $19 on the VIX. And for the last couple of days, we've really jumped up higher than that $19 mark. So yeah, people are a little bit on edge.
Which makes your premium selling strategies more lucrative in
You
the
betcha.
selling of the options, correct? And
You
seeing
betcha.
as, seeing as it's the first of the month in November, 2 months to close out the year, what is your approach, starting today for any of those premium selling strategies?
I mean, exactly. So, if we've got a company that we're no longer worrying about their earnings, announcement, if they're already in the past, we're looking at how we can be selling those options, those high dollar options. People are bidding the price of those options up right now because people are buying them in order, they're worried about what might happen to their holdings. So they're buying options as protection. I want to be selling to that mass amount of people who are trying to hedge their risk. I want to be on the selling side of that because they're paying top dollar. So in order to do that, I get myself into a covering position, something that allows me to sell those options. And then I'm just going to town selling those options at top dollar. And we know that when an option expires, no matter what you sold it for, that extrinsic value is going to be worthless. So we're just going to let the clock run out. But what's great is people are paying top dollar right now for these options that we can have expire. I mean, if you're doing weekly options, it's every Friday. I'm doing monthly options, so it's every third Friday. And since November 1st falls on a Friday, it looks like our options week is going to be early this week. It's going to be November 15th this month. So November 15th, I'm looking for my payday, and then we'll be going on into December. It's just a great time to be an options seller, Tip.
Yeah, and last week we did cover, what you just described can be, categorized as maybe like a shorter midterm trade, shorter term trade, longer, a little bit longer if you want to go further out with the
That's
months.
right.
But during earnings season, like we discussed last week,
I got my hat on from earnings. Remember, Dan Passarelli gave me this hat that says volatility equals opportunity. And that's what we're doing during earnings season, right? People, the same thing that people are doing when they're uncertain about the broad market, they do right before earnings. So they like to buy those options right before earnings, especially the options that expire like within a week or two of earnings. They buy those things up, causing this huge demand, causing this huge run up in price. And we want to just position ourselves on the correct side of that equation. So what we've been doing during earnings sip is we've been selling to those buyers. And then after earnings is gone, right, it's come and gone, then those folks decide that they don't need those options anymore. And so they go ahead and start to liquidate them. And we're there in order to buy to close them at a much lower price than we sold them at. And we keep the difference. So, I like to trade no matter what the situation is. I like to trade the predictable pattern. And the predictable pattern for earnings is people are, a little bit uncertain before the earnings announcements. And so they like to purchase these options. And then after the earnings announcement, they sell those options. And then in the broader market, ahead of this presidential election, ahead of all the skirmishes in the world, ahead of this, people are buying options to protect themselves. And as soon as those events are past, they'll start selling them back, and we'll be either letting time work our way, or we'll close those positions manually. So volatility rush, volatility crush, time passing by. These are all, when you're an options trader, these are all other ways that the option price is influenced. And that's what we talk about here at Trading Trainers, how to take advantage of those details.
and so you and Dan had a great webinar last week to
A
kind
few
of take
weeks
it,
ago.
or
Yeah.
2 or 3 weeks ago, to describe that strategy. He provided some excellent insights. If anybody's interested in checking that out, I'll try and see if I can find the YouTube link, and we'll put it in the chat here.
Sure.
Otherwise, we're gonna post all of AJ's quick links. Here, let's go ahead and pull the screen up. AJ's indicator suite, some love on the YouTube, TikTok, Instagram, AJ's free workshop, AJ's one-on-one coaching, and then the overall trading trainer program. The links to that is going to be in the chat. But on that topic of earnings and a little bit more of a, risky type of trade, right? Like, I think we try not to, when you advise on investing, I think you always are giving people the rationale that they got to pay attention to their risk.
Oh,
And so
yes.
options really allow you to do that. But our guest today works in a different commodity industry,
Dude,
or
this is
security.
so unique, Sip. What Leigh talks about is so unique. I can't wait to just sit back and hear him talk a little bit about how he takes advantage of this stuff. Let me let you introduce him.
Well, we'll take a little bit of a break, and then
Okay.
we'll bring Leigh on. But the cool thing is we haven't discussed too much futures on our 156 episode.
He's got a good way of trading earnings using futures. That's kind of
That's
cool.
right. And piggybacking on the Apple Play this week. I mean, that pretty much, that one earnings report for that one company brought the whole market, or shifted the market. So we'll dig into that. Leo, give us some secret sauce on how to take advantage of that. We're going to take a quick break, throw some of these links in the chat. Get ready to learn a little bit about Leigh Goldstein of 10-Minute Trades, coming right up, folks.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ, I have a quick before we bring Leon, I have a quick question. How often do you pull up, some futures contracts, commodities? I know we discuss oil every once in a while. What do you keep an eye on your end?
I like looking at the futures that ahead of the market. I like looking at the futures that predict the S&P 500, the diamonds, the Dow Jones Industrial Average, the Nasdaq Composite Index. But I'm not really as versed on the futures as a futures trader would be. I just know how they play into the broad market. So I'm kind of excited to hear about especially how Leigh takes advantage of some of the stuff that happens in the equities market using his futures trading.
Without a doubt, and as a Chicago guy, I'm very familiar with futures with the former Board of Trade and the Mercantile Exchange, and just knowing a lot of people in that world. Yeah. So without further ado, let's go ahead and bring Leigh on to the broadcast. Leigh Goldstein of 10-Minute Traders. Good morning, Leigh. How you doing?
Hey, good morning. Good morning. I better be interesting. You guys have really put the pressure on me.
Well, let's go ahead and just piggyback off of what we were talking about this week with Apple and how that moved the sentiment of the market. And are there any other names that are I guess Tesla would kind of be on that kind of have that kind of sway that you could take advantage of a whole index moving?
Yeah. So what we do is very different. And it might even be a little bit different than the way you're thinking about what we do.
Okay.
So we devised this methodology of trading futures, studying the stocks that move the futures, the stock earnings. We originally started just with the FANG stocks, Facebook, Apple, Netflix, Google, Amazon. And we just noticed when we were trading futures at the end of the day that the markets were moving really intensely during the earnings period. That's how we discovered all this. But so we're not so much analyzing the markets, we're analyzing a very tight portion of the market that's almost limited to the exact moment those earnings are being released. So we don't spend our time. We're totally different than the way you are analyzing the markets. I'm not looking at Elliott Wave. I'm not saying you are, don't take me wrong, but I'm not analyzing the S&P. I'm not getting up in the morning and wondering, is the market going to be up or down? It doesn't matter to us. We are taking these very tiny periods in time and trading the volatility equals opportunity in those short periods. We study movement of events, probabilities of that movement. Excuse me, my granddaughter's got me a cold here. And so I don't really care that much about if the market went up today or if it goes down tomorrow. But what I care about is what's Apple going to do? Are they going to move the NQ futures, which is what I'm trading? And are they going to move it in a way that's going to allow me to capitalize on that movement, make some money on it? And of course, teach our members how to do it. That's the key, is the member. We want them to make the money. I don't care if I make the money, really, because my job is to show them how to do what I do. Obviously, we want to make money, and Apple was beautiful. And AJ, we also talked about Microsoft and Meta, and we talked just briefly because they were trading at the exact same time. That creates problems for us because if you have two major companies and they're both releasing their earnings simultaneously, what's that going to do to the market? It might create a whipsaw in the price, because remember, we're day trading. I'm not a swing trader. I'm looking at opportunity at that moment. So we would absolutely be day trading the market as safely as possible, though, even though it's risky, but we want to do it as safely as possible. Our software comes into play there. We have software to help us. And if you like, I'll show you the Apple trade. Apple is very clear. I was going to show you the Meta and the Microsoft. I will say very honestly, full transparency, we made money on both of those trades. But I'll show you Apple because the story's better. We've been trading Apple for years, and Apple's been not very nice to us over the past 2 years, year and a half. We have not been making money on Apple earnings because the price hasn't moved well. So here's what happened yesterday. And we joked in the room how Apple owes us. And right at the exact moment is when we trade the earnings. So here's our software. You're looking at the Ninja Trader platform. Very briefly, I'll just go through the tools real quickly that we use. Thinkorswim newsfeed, TradingView free, just to look at the stock price. And Ninja Trader is the big screen with the red candle and the buy order. That's our software creating those orders. I'm going to turn the video on. Apple just released their earnings. Boom, my trade's over. And I made $840 on that Apple trade yesterday. No joke. And you can trade it in a prop account if you want to. So you can trade it cash money if you have a cash account. You could trade it prop account, trying to trade other people's money. And virtually anyone that traded Apple with us, if they got filled, they made money. I had one member, he didn't get filled. It was too fast of a move. Sometimes that'll happen.
Happens a lot. AJ, do you have any? I have a couple questions. Do you have any questions on what you were seeing there?
No, it seems quite interesting. He's doing kind of the same thing we were talking about with that calendar spread, where he's taking advantage of the change in the, volatility, the change in the, user want of these futures ahead of and after earnings. It's kind of cool.
Yeah, and then so Leigh, my question is, that's more of an earnings play, but is it a similar strategy for the economic reports, or
Yes,
and some are a little bit more impactful than others?
absolutely. So I've been doing this with the same company. I've been with 10-minute trades for going on my 8th year. When I first got here, and just briefly, my background was I got into this just because I was helping my family with their stock trading, with their charts and investing. And that's how I got involved. I just got hooked on trading when I was actually helping my mom with her portfolio. And so I've been doing this with 10-minute trades. We used to be called newstraders.com. We've been 10-minute trades for quite a few years. And we've been designing and upgrading our software. When we first started out, all we did were breakouts. The trade you saw, we call that a breakout.
Mm-hmm.
Most news trades, or many news trades, trade that breakout. You have a price above and below the market, you get an explosion in price, and you get pulled into the market. That's a breakout. But over the years, we've updated our software to create many different other types of setups. We create ranges with time. So there's a lot of traders, they like to trade the market open at 9:30 and a breakout at 10 o'clock. That's very different than what you saw me do. So our software can do that as well. You could create a range in time and trade a breakout. If you think about it, every single trade is a breakout. It's just the way you get there. You're breaking out of a range, an option, buying and selling. You're breaking out of some area in price that's going to give you a profit. Every trade is a breakout. You just reach that point different ways. We also have something we call magnet trades, which is very new for us, but it's more discretionary. Magnets are price levels that everybody looks at, highs of days, lows of days, pivots. They're always being tested during the day. So we designed a way to trade that testing. So we have something called the magnet trade. But to answer your question, Cyprian, it's every news trade is different. Some of them are much slower. That's where we get 10-minute trades. We might spend a minute in the market or 2 minutes instead of a few seconds. And the different type of news report will definitely affect the level of the volatility.
And then because I've seen futures, and that the example that you presented was like, oh, that's so easy to do. but I've seen it go the other way where it's quickly negative 800. And so I'm curious as to like what your risk parameters and how you prevent that from happening, because it can swing against you just as quickly.
Yeah.
Absolutely. Now, I would not lie and sit here and tell you that every trade is going to be a winner, like that beautiful Apple trade, because we know it doesn't work that way. And what you're describing is, so what's the greatest risk to someone who trades the way we trade? And that greatest risk is in a breakout trade, like we were doing, that fills you long, but then it goes the wrong way. And then before you can blink, it tries to fill you short. That's called a whipsaw. You can't avoid it. There are times when you just have a losing trade. I had a losing jobs trade today, but I had a $2,200 winner two jobs reports ago that made up for my loser today. So the idea for us is we look at the news events that have enough good outcomes that the risk is managed when you have that loser. You can't trade. So our mantra is trade the reports that perform the best.
Hmm.
And AJ, when we do our webinar, we'll get into our family money
Yes.
trades, and we'll talk more about that. I don't want to give it all away today, but we control the risk by studying the event and trading the events that work and perform the best. And we often don't trade. We'll have a trade room. We'll look at the recordings. I have thousands of recordings of these economic events. We study them in our trade room. And if we look at a bunch of recordings and we say, hey, the PCE price, that's a tough one for us. It's not consistent with futures. And it's a great magnet because magnets get tested, but breakouts, maybe not so great.
Mm.
But that's how we deal with risk. We're trying to control our risk with the type of trade that we trade and with whether or not we're going to trade it. And of course, with the size of your risk, the stop size and how many contracts, micros versus minis, that controls your risk also.
Leigh, do you have anything on your radar for the upcoming week that you'll be looking at that maybe we'll go into bigger detail when we get to our webinar next Wednesday?
I'm embarrassed to say that I have been so busy this week. Normally, I have my schedule done on Thursday. I didn't even look at the schedule yet this week. I'm guessing that we've got some big earnings, probably Home
Yeah.
Depot. Home Depot might be next week. It's due. Some of the retailers are coming up, like Walmart and Target are coming up. But in terms of big economic reports, I'm embarrassed to say I didn't do my schedule yet. So it'll be
I'm there
done
with
for our
you.
webinar, though.
I am there with you. I have a 3-year-old daughter that we fawn over, and this has been
Yep,
her week, so I'm a little
right.
bit behind on things as
Halloween.
well. So
Yeah,
I get it.
my
Well,
grandkids are
today
2.5.
was the big one. Today was a big one. Earning everyone out, and whenever the next Fed decision is, I guess. Lee, do you
Next
ever?
week. Next week.
Next
I
Is
week,
think
that?
that's
right
the Fed,
after
right?
the election.
Yeah. Yep. That'll be very
Oh,
big.
and then one final question for my end, Lee. I know that you mentioned the NQ. Are there any of the other futures that you kind of have some strategies around that you have on your
Absolutely.
radar?
Yes. So we trade a lot of YM. So especially for earnings, if a company like Home Depot, they're heavily weighted in the YM, the Dow. So they'll move the YM more than they will move the NQ. And we trade a lot of gold, a lot of oil. Whatever the instrument is that moves from that economic report, we'll trade it.
Sure.
Currency
Sure.
futures also.
Oh, okay.
Interesting. Awesome. So next week, Wednesday, AJ and Lee will be hopping on to discuss another way to crush trading results and make profitable in decisions, trades, using these earnings calls, these earnings reports, with futures specifically in Lee's program, 10-minute trades. So Lee, we appreciate you coming on to AJ's show this morning, giving us a little bit of a glimpse into what people should expect. Anybody watching or that is a member of the Trading Trainer community, YouTube, some of our socials, keep an eye out for the emails and the invitations. Those will be heading your way the rest of the week. And, bring your notepads. And if you have questions, that's a full hour for you guys to dig into the details and learn a little bit more about this unique approach to investing. AJ, I think you would appreciate that. Good investors should know how all strategies work and expanding the toolkit.
Yeah, and it's totally for those people who are like, it's a whole different mindset. I may not want to go there right now. If you actually think about it, futures are a derivative as well as options. And Lee's basically trading the same principles we are. It's like the buildup and the use of futures ahead of an event and then right after the event. It's kind of the same mindset. So Lee's going to go into that depth with us on our own little private webinar that's separate from this AJ Brown show, where we can just give Leigh our full attention. And I went ahead, Sip, if you hit refresh on your quick links page while Leigh was talking, up right at the top of the quick links page, everybody, I put a button that says webinar with Leigh. So if you hit refresh on that, you'll all see that webinar with Leigh button. You click on that and you'll go right to the registration page. And I recommend highly that even if you don't think you can make that date and time, which is next Wednesday at 7 p.m. Eastern time, that might be, for you guys on the Pacific Coast coming in at 4, you might still be at your day jobs or something like that if you have a day job. I would register anyway because we'll give you the replay and you'll already be on the list to receive the replay and you can watch it at your own time. Still, you should try to make it there live so you can ask Leigh some live questions during the Q&A. There's always value to attend something live, but you should register whether that date works for you or not, because like I said, the replay will be sent your way and that's, going to be worth your registration in gold. So definitely take a moment, click on the link, or, I see that SIP put the actual direct link to the webinar registration there, or, you could wait for our emails, but why? Why wait when you could totally register right this minute, right here, right now? Get it over with, get your name on the list so that we make sure we have room for you in the room and we put you on the list for the replay.
Without a doubt. Links are in the chat. Leigh, once again, thank you for your time. We'll be catching you next week. Enjoy the rest of Employment Friday, the 1st of November, and have a good week. We'll see you next week.
See you next week,
Thanks for having me,
Leigh.
guys.
I'm
I
looking
really
forward
appreciate
to it, man.
Okay. Thanks again for the invite. See you soon.
Bye.
All right, AJ.
I'm looking forward to that, Sip.
I'm a big futures guy. So
are you?
I mean, that was like when I first got into the industry, it was in Chicago. And so,
Yeah.
I heard all these stories and I saw all these guys walking around with these jackets and these trading cards. And I was like, man, that's so cool. Right.
Yeah.
And so futures, but in Chicago, the options exchange is also very large. So, and they were like right next to each other. So all the futures guys would hang out with all the options guys.
Crossing the street. That's right.
Yeah, in Chicago. All right, cool. Looking forward to that webinar with Leigh. Big shout out to him for jumping on the show. All right, AJ, do we want to start off with the review of last week's Russian Crush, or do you want to dig into your pick of the week here?
I'm going to save Drew. That was a review of Xerox. That was a trader named Drew. Let's save that for the first thing we do during the speed round. I'm so excited to share my pick of the week.
Well, let's get into it. AJ's pick of the week for the 1st of November. Wow, we're only 2 months away from 2025. That is wild. Your pick of the week this week is
Occidental Petroleum, everybody. Occidental Petroleum.
OXY on the ticker. This is an oil refinery, something like that.
Yeah. Occidental Petroleum's got they play in a bunch of the different realms, but they've got a lot of oil refineries going on. I'm not sure what's going to happen with the price of oil. There, you've got these tensions high in the Middle East, but you got to remember that in the last decade or so, the US has positioned themselves as the number one producer in the world of oil, right? Um, a lot of people don't realize that because of fracking technology and things like that, the Permian Basin and different places where traditional we thought that they were all but dried up, and we've gone back in the last 10 or 15 years, and now we're producing more oil than anyone. But you also got to remember that we trade on a world market. So even though we produce more oil than any other countries, if another country that's also a big oil producer, sends a hiccup into the world market, it's not like we close the doors and stop trading on the world market. Our oil goes up and down in price as well. But with that said, Occidental Petroleum has kind of been plateauing at this level of support around $50. Yes, they've got earnings coming around the corner. And so I was telling my program participants yesterday regarding premium trades, right? Premium trades are where we let the clock run out, right? And sometimes you don't want to be in a premium trade, if earnings is approaching. But I clarified that, and I want to clarify that for you guys on the line. You don't want to be in just your initial covering position, right? Because that's basically a directional trade. And when earnings come, we often don't know what direction the stock is going to go. We don't know what investors are going to do once they hear the information around earnings. Sometimes a lot of people say, well, if the earnings are good, the price will go up. Not necessarily. I've seen plenty of situations in my 25 years of watching the markets where a company reports better than stellar earnings and investors aren't happy about one little thing and they cause the price of the stock to go down, or where earnings have been, less than, exciting, but they were maybe a little bit more exciting than last quarter's earnings. And so investors, send the price. So it's not only what are they going to report during earnings, it's how are investors going to interpret and react to those earnings. It becomes quite complicated. And like Leigh said, why don't we instead trade the more solid route? So when it comes to these premium trades, being only in the initial covering position can be kind of, six of one, half dozen the other, very risky. So either you want to be in all cash, which means, let's see, earnings and the earnings announcements are going to be on November 12th. So either we wait on the Occidental Petroleum trade until after November 12th, or if you do your step 2, which is to apply that collar, right? That's where you sell the premium and buy the protection. If that collar's in place, your trade is going to automatically adjust. So it doesn't matter whether price all of a sudden shoots high or if price all of a sudden shoots low. All of your boundaries are now defined. And if you defined when you place that collar such that you create a risk-free trade where you can't lose money, then it doesn't matter what happens during earnings. So just as a reminder, either you're in all cash or you've got your step 2, your collar and your protective option, your premium sold and your protective option bought. We call that the collar. You've got that step 2 in place, then you're fine weathering earnings. Nothing's going to happen to your trade that's not expected. So with that said, we're approaching a bottom here, SIP. This would be a great time to buy some Occidental Petroleum. If you're going to buy Occidental Petroleum, you want to buy it in lots of 100. The other, possibility is instead of buying Occidental Petroleum, we could use a substitute option. The substitute option I've got my eye on, even though I've got in my notes, I put the wrong ticker symbol. It should have been OXY. It's the June of 2025 option, $35 call. So I would either do Occidental Petroleum. Let me see if I can quickly just, I don't know if it's worth editing this in the text, but I'm either going to buy Occidental Petroleum or I'm going to buy the Occidental June 2025 $35 call. Those are going to be good things that swap. That's your initial covering position. And you do that at as low a price as you can. And then, like I said, earnings is coming. let the price appreciate. We have all the way up until the day of earnings. Even if the price of the stock only goes up 50 cents, a dollar, or if it does something great, like goes up a couple dollars, apply your collar, get through earnings. Once you get through earnings, you could take your collar off, or you could leave it until it expires. But that's kind of my strategy on Occidental Petroleum. But I can't pass up, SIP, this opportunity of buying it at this low. I'm going to wait for my signal to make sure that it confirms that it's a low. But right now it looks like we're at a low. So whatever you use to determine bottoms, whether it's order flow like Fausto talked to us about, whether it's indicators like I tend to use, wait for your signal to come in, buy your initial covering position, and then before earnings, place your collar. You'll be set for gold.
And your bias is to the upside, correct?
Yeah.
Yeah. And yeah, oil, I feel like you can't really go wrong in the long run.
Good one.
But for anybody that is looking at the chart, because it does look like a very nice support there.
Yep.
You can see AJ's custom indicator with the blue and pink.
Oh yeah, we're waiting for our blue arrow. We're waiting for the next blue one.
As always, if anybody wants access to that, the link to AJ's free indicators is on our TT4 links for me page /links. That'll get you there. I like that setup. Occidental. It's looking good. All right, we'll keep an eye on that. And we've got. I say we review, the volatility crush trade.
Yeah, for sure.
Week.
Okay, Xerox. Okay, so you guys remember that when we were talking about the calendar spread, which is what we like to use, there was some criterias, right? Let me just for a second, SIP. You guys remember that calendar spreads are really nice because they get rid of that directional component, at least in the intrinsic value side of the equation. So you don't you get this profit and loss diagram that kind of looks like this. And this thing, I know it looks funny, but this thing is highly responsive to implied volatility crushes, which is what happens after earnings are announced. So you might be able to sell, when you buy this thing, it's down here like this. And when you sell it, it jumps up like this, right? And so if you buy it the day before and then sell it the next day, all well and good. But you'll notice that when I draw this picture, that there's this parabolic curve on either side of the at the money strike price, right? Which tells us that this strategy also is quite, the nerds in the room call it very gamma responsive. That means if there is some price action, we worry. So that's what happened to Xerox. We agreed to go ahead and trade this, and I did. Here, let me show you the specifics. I've got it right here. I'm going to go ahead and put it into a little text document for you guys. Give me 1 second. I'm going to pull up TextPad. This is my favorite, text editor here. And I'm going to copy and paste the specifics of this trade in here so you can analyze this with me. This is the trade we did thanks to, I think it was Drew. Yeah, Drew from Long Island said, hey, let's take a look at Xerox. So take a look at this. So on October 28th, this was the day before earnings. We went ahead at 11:21 in the morning. So I didn't wait all the way until professional hour. I happened to be in front of my computer around noon, a little bit before noon. The underlying stock, Xerox, was trading at $10.42. And so I went ahead and purchased this Xerox. The back month option expires in January. The front month option expires in November. Xerox doesn't have weekly options, so I had to use the monthly option. So November, January, I used the $10. We were, there was a $10 and there was an $11. I was going for the $10 side, and because it was on the lower of those, I went ahead and used puts. So I did that calendar spread, and I bought these things for 46 cents. And that's the equation, right? The day before earnings, you buy your calendar spread. So now earnings was released, and as soon as the market opened, I got in there 9:52 in the morning, so about 22 minutes into it. And I'll tell you, Xerox, the stock dropped. You can see the stock dropped significantly, which kind of activated that gamma thing going on with our calendar spread. But the implied volatility crush was so high, I still wound up getting about 4 cents a share. Now, it shows here that that's an 8.7% ROI. I mean, I guess so, but 4 cents a share, that really got eaten up by my commissions. I probably made only about 3 or 4%. So this strategy doesn't work as well. Remember in 3M, when we talked about 3M last week, 3M pretty much went through earnings and we got out at the same price as we got in. The 3M was at the same price the next day that it was when we got into our calendar spread. And so we really got the most of that implied volatility crush. In other words, if you remember my 3M trade from last week, we doubled our money just overnight. Whereas in this case, because we had this drop in price, I mean, Xerox literally after earnings, I just kicked my menu out. Who cares? Xerox literally after earnings dropped more than $2. It dropped more than 20% of its value. My strategy eked out 4 cents per share. So basically, before commissions, 8.7%. I think after commissions, I wound up gaining a little bit more than 3%. I didn't get that real whammy if, the underlying stock price would have stayed stable. But, that's you win some, you lose some. And even when you lose some, you don't lose that bad.
Yeah. And this is an example of earnings not going the right way, but not taking as much risk. And like you mentioned,
that's the beautiful part of it. We had the stock do what we didn't want it to do. We had that gamma influence affect our strategy, but the implied volatility component of that strategy is so freaking strong that it was able to weigh out that gamma. And we still walked away with a couple of percentage points. Not the big home run that we did with 3M, but if you did a bunch of these earnings trades every season and you even had home runs on 50% of them and then had other ones that basically broke even like this one did, I mean, you'd be a happy camper, I think.
Yeah, and I think that's the name of the game is you win some, you lose some, you have greater profits in some examples, but the goal is to not lose. So this is
That's
a
right.
nice little setup for that.
Cut your losses like we did here. In fact, again, we made a couple of percentage points, but it wasn't, what we would have wanted to make. But your losses are very little, if not, break even, and your winners are kick ass. So that's the name of the game.
All right.
Let your winners ride, let your losers cut the losses as quickly as possible.
Big shout out to Drew from Long Island for
Thank you,
picking
Drew.
that one. We've discussed that one for a couple times this here on the show. We do have 2 more names that the people want your feedback on. AJ, looks like
Sure.
we have just not enough time to run through those. Let's stay out east with Tony in Boston, Mass.
Yeah.
Wants to know about jetliner, airliner JetBlue, ticker symbol JBLU.
Do you remember JetBlue? Well, who did they acquire? Did they acquire Spirit? Was that it?
Well, I think they were trying to acquire Spirit, or did they?
I think they did. So you guys remember that we stepped away from JetBlue for a while, right? Because we like, when we're doing our premium trades, we like companies that aren't in the news. And so JetBlue and Frontier were on this bidding war to try to acquire Spirit, right? And really, we all thought that Frontier was going to be a better bet with Spirit. But JetBlue, I think, won out in the end. And it was all over the news, and it was causing their stock price to become unpredictable. And so we stepped away from it. Usually we like very predictable symbols, which means they're not going to be in mainstream media. Well, it's been a while. And so I see why Tony from Boston is looking at JetBlue now, because now that they're not getting the camera lens, they don't have a whole bunch of folks watching them. And it's just, your hardcore traders, your people who want to be in JetBlue. The pattern looks really sweet. Let me go ahead and I'm going to back us out to a whole year's worth of price action. And so it looks like JetBlue is staying just above the penny stock line of $5. They're trading between this $5, this $8. They just reported earnings. It kind of caused their price to dip. I'm wondering, Tony, are you looking to get into some JetBlue? Do you think it's at a bargain price? Because it kind of looks like it does. Here's what I would do, Tony. I would, first of all, if you don't have my free indicators already, I would go and download my free indicators. We put a link into this workshop chat here. You can go to our links page and you can click on get the free indicators. You get access to my web portal, download those indicators, install them, because I would use my fast MACD indicator. So that's this blue and magenta arrows that you see here. And if you wanted to know the settings, once you have it installed, I like using volume weighted average price as my seed price versus closing. So click that to VWAP, put in your 6, put in your 19, put in your 3. Those are the fast MACD numbers that came from the Appel family. Those are the guys that came up with the MACD way back when. And set them to all exponential, and you'll be cooking with gas. So I would wait for my fast MAC indicator. I would wait for a light blue arrow to appear before I traded this. But when I get that light blue arrow, I mean, damn, I might think about buying some JetBlue. And I would buy it in lots of 100. So if I bought, JetBlue stock, I would buy 100 shares. Or we could use our options lookup tool. And I'm going to pull that up right here. I'm going to come right over to our members area, and you can get access to this using your free membership. And I'm going to click on trading tools and options lookup. I'm going to put JetBlue, JBLU. And if you're looking for options substitutes, set the number of strikes to all of them and click this button called show price components. This is a feature of our tool that I've seen that I've never seen anywhere else, where you can see the price components in percentages. It makes it really easy to find option substitutes. So I'd go pretty far out, maybe June or March. I like the June option. This is June of next year. And yeah, I like this. There's a couple of different options here. I could see going for the $4 or even the $3 strike, maybe the $4 strike. I would go for the $4 call that expires out in June as a substitute. So instead of spending $5.70, I'd be spending $2.28. So about half the price. So I'd get a little bit of leverage in there. And this is already in lots of 100. So you could buy this option as a substitute. This is the JetBlue June $4 call. Or you could just buy some JetBlue. And then once you've, gotten some upward movement in that stock price action, put your collar in place. Sell the near term at the money option. Buy the 3 to 6 month out protective option. Create that collar. And then just rest easy. Let that clock tick by. Create those income streams. That's exactly what I would do with JetBlue. I'm thinking that's what's on your mind, and I concur. But do wait for the signal. You want a really confident bottom reversal signal before you think about buying that initial covering position.
With a very favorable stock price under $6 at the moment, which
makes it very affordable. I think
very
you're going to be buying it at a nice bargain.
All right. Thanks, Tony. Moving on to back out west. Kathy in Reno, Nevada wants to know about rideshare company Lyft, ticker symbol
Ah,
LYFT.
oh, you know what I'm seeing here?
Earnings.
Yeah. I'm seeing on November 6th, the next week, after market close, we're getting some earnings. You know what I'm going to say to you, Kathy? We should trade this with our calendar spread. Now, some of the checks, let's do it right here, right now. I'm going to go back and I'm going to look at the last 4 earnings. And I'm not necessarily caring about what the earnings themselves are saying. Here we lost 3 pennies a share, 7 pennies a share, 8 pennies a share. Here we gained this last earnings. Let me zoom in here. We gained a penny a share. So Lyft is kind of at that point where they're viable, but they're not making money or losing money, right? But let's take a look and see on the day of earnings, does price change too much? A year ago, not so much. 3 quarters ago, yeah. Here they were, and then the next day it popped. Over here, a little bit of a pop, but nothing drastic. Over here, yeah, a little bit of a drop. Nothing as drastic as that one 3 quarters ago. So I'm thinking SIP, just like we did with 3M, just like we did with Xerox. Maybe we should come back next week with our trade on Lyft and call it the Kathy from Reno trade.
I love it because knowing about the rideshare industry, they could make or lose a lot of money every quarter,
Yeah.
for a variety of reasons.
So we're thinking, just to keep everybody on the same page, we're thinking a calendar spread. If we go with the strike prices above where the price is, we'll use calls. If we go below, we'll use puts. If we decide instead to do both, we'll do one of each. We might do it that way. It'll depend on what's happening. Like I said, this is after market close, so we'll be buying this calendar spread on November 6th. I don't know why I said January. November 6th. We'll be selling it back on November 7th, and we'll decide at the moment on November 6th whether we should do a call calendar spread, a put calendar spread, or do both.
Oh man, next week is going to be a lot going on next week's show.
Very cool. And Leigh mentioned Home Depot. Let's see. And I think that ticker is HD. It's a little bit more expensive, but yeah, earnings is right around the corner. Home Depot is another one of those symbols that doesn't really move very much. Man, maybe just for fun, we'll call it the Leigh trade. We'll trade earnings on Home Depot. Earnings is scheduled for November 12th. Is November 12th even next week, or is it 2 weeks from now?
It's 2 weeks. The 8th is going to be next week.
Okay, so we maybe we'll keep Home Depot on our radar, and we'll report back in 2 weeks what we find out with Home Depot trading it our way, and we'll compare it to trading Leigh's way when he talks about it at our webinar next week.
For sure. And once again, links to that webinar are in the chat. Highly encourage everybody to head on over there and sign up. Special guest Leigh Goldstein of 10-Minute Trades. Thanks to Leigh for hopping on the show, giving us some insights. AJ, heading into the weekend, heading into the 1st of November, final thoughts, recommendations, ideations?
I mean, next week's going to be kind of neat. I think that I'm going to make sure, SIP, that all my callers are on, right? I'm going to spend the rest of today, and if I don't get them all on today, I'm going to make sure they're on Monday. If your callers are on your premium selling positions, then no matter what happens next week, presidential election, Fed, interest rate drop or hike or hold still, no matter what happens, you've got your defined risk, defined reward. Uh, you've got it all figured out. So I'm going to make sure I have collars on everything. Then I'm going to kind of sit back and enjoy the week of, all the headlines and all the news, and we'll see what happens in the news. But I'm going to make sure, because you guys remember, that's the beautiful part about once your step 2 is on your premium selling positions, no more white knuckles. You know exactly what's going to happen. If it gets exercised, you know what you're going to walk away with. If the protective option kicks in, you know where that limit is. If it just goes in between those two strike prices, you're going to wind up with some income trades. It makes things really simple because it's fail safe insurance, right? So I'm going to make sure my collars are all in place. I'm going to keep, seeing which of these earnings plays are going to be on my radar. Definitely going to watch Lyft for Kathy in Reno, Nevada. And we're having our birthday party for our little one. She had Halloween last night, and Daddy ate a whole bunch of the candy. And so then on Sunday, we've got some friends coming over to celebrate, and we're going to have some 3-year-olds running through the house, and that's just going to be great. But Daddy's going to probably be eating more cake, and then Daddy's going to have to spend November and December working it all off at the gym.
Hey, sometimes that's how it goes.
That's how it
but
goes.
You'll have a lighter Thanksgiving meal maybe this year. Yeah.
I better.
All right, AJ. I love that. Next week's day is going to be historic one way or another. We're going to definitely remember that in the future. As always,
and next week is Leigh's webinar. I keep
exactly.
Presidential election, interest rates, and Leigh's going to show us how to use futures, analogous to how we're using options. It's going to be awesome.
Without a doubt. Well, appreciate Leigh's time, AJ. Appreciate your time. Appreciate all the viewers out there for tuning in. Feel free to show some love. Hit that like, hit that follow, hit that subscribe button.
Subscribe.
I really do appreciate it. If you have any questions throughout anything, feel free to throw it into the comments. Send us a DM. Someone will get back to you. Otherwise, everyone, please enjoy your weekend. We will catch you guys next week.
Bye, everybody.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh